Rod Kusin and Spooman for Risk on September the 8th, 2016. What a beautiful, easy short with the right tools. Oh my goodness. Look at this market profile down to 2170 this morning on the new contract. Just, I mean, right smack dab to 2170. If you had that data with you, just looking at the pattern, overnight pattern, we were short. You could see where this was headed, and right down there. It was so simple, so easy. You know, a gorilla could do it. Okay, honestly, this is so simple, and just having the right tools. Oh, it's marvelous. Now, if you look at our video from the 6th, okay, you know that we were a little puzzled by the market action, and I don't know that I can show it to you real clearly right on this chart. I'll go to another one in a second. But the premium, this is the right bar. Let's see. No, this was the right bar. Now wait a second. I've got to go to a different chart because I can't really tell. Okay. It was right here. All right. Now, with the new contract, this is the ES continuous contract that's recalculated after the new contract comes out. And so the price is now a little different. But the market had dropped in this instance down to 70.75, and the premium said we're going to return there, and we said so. And then the market came down to this price, 71.25, and there was a little indication that price was going to get hit. Now, that having been said, the following day, you know, the market came down and came within a quarter point of that number before it rallied up, and we mentioned how this bar on the premium, this bar on the ES associated with the premium, which is not showing right now, indicated we're going to go back and test that. So that, of course, is what happened. But it didn't change what the premium had been forecasting. And now, 2 days out, okay, that we would come back and test these prices, which, as you can see, we just did. So, does the premium work? Oh my goodness, does it work? You gotta learn how to read it. That's what we teach. I think we are about the only people out there that are showing folks like you how to read this. And we've got the tools to do it. You can't do it real well without training. You just can't. You're going to spin your wheels. You're going to get frustrated. You're going to give up on the best indicator in the world. And there's no reason to do that. Pay a little money to learn. My goodness, this is the best business in the world. And with the right tools, you know, you can learn how to do this and do it well. So now, the premium has successfully forecasted the drop. Now that business is over, we have to start looking for what else the premium can tell us, and we can tell you right away that this bounce off of 2170, which just occurred right here, all right, 2170. Now look at the premium. Look at where the premium is, right? At the time of that bar, there was a nice divergence here, all right? And there's always a divergence. There's always a divergence at the time of a major pivot. That is not going to be hit again in the sense that, we're not going to go back and the premium doesn't tell us that we're going to go back and retest that. Now the question is, does the premium tell us we're going to go back and retest this? That's the issue that we want you to be concerned with. Let me get this out of the way. We'll just move it up here. To know whether this is going to happen requires you to understand the concept of threshold. And that's what we teach in our course. We believe that just like the ES can become overbought or oversold, if you put a standard good old plain vanilla stochastic on the ES, use whatever interval you want to use. At some point in time, it becomes overbought and oversold. The same is true with the premium. But the nice thing about the premium is it doesn't matter what interval you put it on. You can put it on a 5-second chart or a 5-minute chart, and it's going to tell you the same thing. And when it becomes overbought or oversold, it's going to be the same. So you don't have to screw around with intervals to understand when the premium is saying that the market is overbought or oversold. That's powerful. Oh my goodness, is that powerful. So what can we tell you, given what we see going on right now? So from this initial pivot right in here, where the premium was down at -826, to this pivot right here, where the premium is now lower, all right, down at 842, to this low bar, and then to this low bar, -843, which is lower than this pivot here, okay? That's 842, this is 843. This is lower than that. This is also lower than that. But it's also lower enough to predict that this will be tested. Okay? Because there's always divergence on the premium at a major pivot. Okay? So this is going to be retested. Now, it doesn't mean it's going to be retested immediately, but it's going to come back. This move is not over. And we won't know whether it's over until we come back and test that price. Now, I just went and did a manual check of these prices. I just went right there and looked at it. And we've got an indicator that'll do it automatically for you. But the point of the matter is that these two pivots, all right, this, and this had lower prices or lower values on the premium each time they were hit. On that basis, this will be retested. It's pretty cool. Now let's look at the other side. What can we tell about where the market is headed on the upside? Our first pivot here, premium was at negative 723. Then we've got two lower pivots. I believe these two are equal highs. Yeah. Now, as the market came down from this, we had this spike up, right? Spike up in the premium. So when we dropped here, the premium already said, oh, this has got to be, these values have got to be retested. And the value of the premium at the time of this pivot is associated with what we call a UU here, and it's at 716, right? So when we come back here, you can see that the premium is way below that level. Right in here, way below. The highs are way below. Down we come. Now, what else can we see? This big push up, again, suggests, well, whatever that price is right here is going to be retested, and it is over here, and we've got a drop in the premium at that point. And so from the standpoint of that drop, the premium suggests that this price will also drop. But as it does, we get this spike right there, which is above this threshold. We've got another spike here that is also above the threshold, this new threshold right there. So this is pushing us up. Now, we're obviously, at this point in time, much lower on the premium, which is indicative of the market coming down. Now, it may, nevertheless, continue to move up. In order to get a good picture of that, we look at several items, one of which is a very obvious gap, which you can plainly see this gap right in here. All right? And we've got a little indicator here that will help you to identify gaps. But this is a 10-second chart. I think that's a fairly likely gap to be filled. Low is at 73.50. The next opening bar is at 73.25. So you get a quarter point gap, and normally these gaps get filled. So we're not quite high enough to fill that. So I would anticipate that this will, yes, it's coming down for a moment, but it'll continue to go back up just to fill that little gap. All right, and if you don't know what we mean about gaps, come and take a demo. We look at gaps a little differently. Intraday gaps, intra-bar gaps, very predictable. All right, so the move up is not overbought as of yet. It's not overbought as of yet. The move down is not oversold as yet. So what's going to happen first? It's an important question. Come and take a demo. We'll help you to resolve that conflict as well. So, in any case, we expect this market is going to go back up before it comes back down. So we'll give that some time, and we'll come back. All right, we were wrong. It did not go back up first. Mr. Obvious, oh yeah, okay. All right, could not have necessarily anticipated that. But nevertheless, all right, we said we're not oversold yet, and we're not overbought yet. This drop in the premium, yes, was suggestive of the market coming down a bit, but we could not have really seen evidence of that until this bar, which just occurred, and then down we came. So we penetrated that level. All right, as you see, we came down a little further, and what do we see again? Another low bar on the premium. So, all right, in spite of the fact that we are moving up, the premium says we will continue to move down. We are not, as of yet, oversold. We're going to come back down. Very clearly, we're coming back down. So you want to look for opportunities to short this move, because we're still coming down. Very important. Now, do we have anything that's really telling us how far up this is going to go? The premium is not telling us that particular data. All I see here is this gap. All right, that's the only thing that I see right now. And it looks to be up there at 73.50. Now, a nice move down like that can give the market enough energy to move right back up here. But it doesn't mean that this move is over. Okay. Everything the premium could tell us thus far, it's told us. Okay, we were so close to that gap. That's why I felt that we were likely going to continue to climb, in spite of the fact, that the premium had dropped off. Okay, premium was way down here at the time of this high, so there was no more energy for this to move up based on the premium. And that little spike up right here, all right, right above this particular threshold, somewhat indicates that that price might be tested. 72.50. Yeah, 50. All right, now and that's discounting this little gap here. The premium above that threshold somewhat indicates this. But now, as you see, as the market has climbed up, we went way above that threshold, and now we're failing again. So we've got to get a little bit more energy to push us up, a little bit more buying to push us up any further, because we've kind of lost the thrust going up, and that's not unusual. This has moved up from 69.25 all the way up to 72. All right, so nice, just about 3-point move here, soon to be. We'll see if we can push that up a little higher. We went ahead and just turned on our gap finder. We'll take a moment just to describe to you the concept of gaps, as we like to call them. I don't think I've ever really addressed this in any of our videos, but I think it's a powerful point. And that is that in an electronic market, as we trade in here, there is so much volume on every tick, at every tick, I should say, meaning at every quarter point. There's so much volume that it stands to reason that the opening bar, wherever you're at, the opening bar should be equal to the closing of the previous bar. So pick a time, any time, whatever that time is, the opening bar of that time should be equal to the closing bar of the previous, the close of the previous bar. Pardon me. So In most instances, that's correct. But there's a few instances where it's not. And by finding those gaps, we see a very consistent attempt on the part of the market to close those gaps. And you see these lines here that have shown up. This green line, this is a low gap. Yellow dotted line is an upper gap, meaning that the open of the previous bar is below the close. Pardon me. Need more coffee this morning. The open of the current bar is below the close of the previous bar. That'll generate a yellow line. So that's where that gap is. And we expect that, to be filled. And interestingly enough, often when it is, that we get this reversal. So we had this little gap here. Market came down, came up, filled that gap, and what happens? It turns right around. Now, again, I say we expected it to go a little higher just because it was there. It didn't, came down, but it's heading back up. And it would be not unusual if, when it does fill this gap, that the market will turn right around and start to drop again. Doesn't always happen, but it happens enough for it to be somewhat predictable. So if you're playing that game, if let's just say you wanted to go long into that gap, we'd recommend getting out right at the gap's fill. Put in a limit order right at 73.50, and if you really wanted to play it, say 73.25, because oftentimes you'll go right up there and hit that gap fill and turn right around and go the other way. And if you got a limited order in there, there's not enough to fill, enough buying to fill that, enough selling to fill that gap wherever it may be. It may not happen, and you'll get frustrated. So put in a sell order at 73.25. You're pretty safe. So let's come back as soon as we get up there. Oh, and I should say, yeah, we will go higher. How do we know that? Look at that bar. Okay. And look at this bar on the premium. Okay. Look at this low, forgetting the fact that this is not yet oversold. And this bar here, okay, comes up to 767. This bar here, okay, 769. Okay, it was a little bit less, but nevertheless a strong bar up and above the threshold. So up we go, and you just saw it happen. And where did it go? Where did it go? Is it a random walk that it went right back to negative 737? Left a little gap there, by the way. See it? Okay. Now, does this tell us that this move is over? Because if you look closely, again, negative 767. This line up there is negative 769. Just slightly less. And this, again, considerably less. So if you were to draw, let's just say, like a MACD curve, all right, you would have to say that this little move here is over with. All right? You compare what's happening here to what's happening here on the ES. And you can see this move is over according to the premium. And so we get this drop. and we get that little gap fill. Now let's see if we can't anticipate when this is going to turn around and start going back up again. Okay. So you go back here to this low. This is an uncharacteristic low. It doesn't make sense. There's a direct relationship between the highs and the lows of the premium and the highs and the lows of the Spoos. Boy, am I teaching you a lot today. There's a direct relationship. So you're getting higher highs and higher lows. You should be getting higher highs and higher lows on the premium. But the premium tells you things that you can't otherwise see. Instead of getting higher highs and higher lows on the premium, you're getting lower lows on the premium. Look at that. Okay, this is a lower low. All right, yes, we moved up here to this pivot. The price of this pivot here, all right, 71.25, is a little lower than it is here. It's true. But it's not lower than it is here. And look at what the premium is doing. Okay, look at this bar compared to that bar. This bar is much lower than that bar. There's weakness here. That gets tested. Now we're at a higher low on the premium. Okay, so now we can move back up. We do. But as we do, we get to this bar here, and this is lower still. So that pretty well suggests, yeah, this move up is ready to come back down. Premium is forecasting that. So we do come back. We drop a little bit, but not that much. Okay, this price needs to be tested. It really does, because this bar is so much lower. You can pretty well expect that the price in here is going to get tested. And even drop below that, right? 71.25. We come over here to 71. It's about right. Okay, and what do we have? Do we have lower lows on the premium? No, we have higher lows. Now we're ready to go back up. Pretty cool. Now we have to watch. Could you have taken a long trade in here? Well, sure. You've got, just look at the price here. Right? This low on the premium drops us a little further. All right. Now look at where the lows of the where the lows of the Spoos are here, and where the lows of the premium are. Now we get this low, equal low, slightly higher low here than it is here. Now, in all honesty, as I rethink that, I may be saying, yeah, we could get that price retested, because the relationship between this and this and this and that, this is a lower low. That price should get retested on that basis. But you've got a little bit of a divergence as well. And for that reason, yeah, we could expect a little bit of a move up, but now it's coming back. We didn't get high enough on the premium here to really move us very far. So it looks like we're about to come back down. Fill in that little gap there. And then maybe start to come back up. So we'll see. We're not going to have much time to continue this video this morning, however. But what was really interesting was what the premium had forecasted 2 days ago. We said this market would short. It did. Yesterday, it bounced off of the very well-established point of control. But now, this morning, as you can see, it came back down and did exactly what the premium said it was going to do. Okay, we'll come back. All right. Now, if you didn't have the premium, oh my goodness, oh my goodness, oh my goodness. If you didn't have the premium, would you have any idea of what is about to happen here? Look at what the premium just told you. Now, for those of you that don't really even know how to read the premium, look at these bars. What does it suggest to you? Big down. Look at that. What does that tell you? Yes, it's coming back down. Okay. All right. We got this gap up there. Now, you remember what I said? You get this gap fill, and oftentimes you get this like immediate drop. All right. May not happen. Let's just take a look at market profile here for just a second. All right. We get 75.25 way up there. All right, we just filled that gap. Let's go back. All right, nice boost. Okay, what does that tell you? We're going to continue on up. Yes, we'll continue right on up. But we're just about out of steam. Now watch the premium. Watch the premium here. Boy, big bar. Big, big, big bar. Okay, we're hitting new highs. Okay, new highs for the day. All right. Now, when the premium drops below that level, as it just did, okay, see what happens? Look at the highs of the premium. You may get one little, these are pretty high bars, so yeah, I was about to say, we could get another move up here. There we go. And we're still above that yellow line. Now on the next bar, we're below it. Okay, so that could have been it. That could be as far as she wrote. And that would coincide well with this move here. All right. This showing us, at least from a cash standpoint, that we're overbought here. And the premium is now also agreeing with that. So now you're under both of these particular thresholds. And we're going to establish a new threshold. Let's see here. Yeah, you wanted to short this. Now we're going to come back down. Beautiful short. Look at this. Watch this. You short this here, you maybe get a fill at 70. Terrible fill. You get a fill at 75.50. And even 75.25. Terrible fill. And Wait a second here. Wait a minute. Wait just a minute. I'm not looking at the right bar. We're not over yet. Sorry, Charlie, we're not over. This is not over yet. I looked at the wrong bar. It's too tight. This is associated with this. This is above the yellow line. Where it's not over yet. It can come down and come right back up. So I would say we are not over yet. See the drop here. Now again, this we're suggesting this drop is not over. We're getting this drop, okay, is continuing. And just look at the premium, it can give you a real good picture. We've got these threshold lines here, and we're way below that. Wow. This is almost a range bar right in here, what pushed us up. And what we see, that's a full 1 point bar. We usually get usually a 50% retracement on a big bar like that. And it usually happens very quickly. And okay, all right, we may be over. Now, it looks to me like the threshold lines here are just a little bit high. Let's see if we can't get a rate. Oh boy. Huh. We can ignore this bar. Okay, I'm just looking at our thresholds here. That looks about right. No, it's not. We're still way below. Ugh. Here we go. All right, that was a 75% retracement of that bar, and then another big bar down. Wow. Okay, it looks to me like we've got kind of a naked bar situation here. So right now the premium says we're coming down. We're going to continue to come down. You've got to look at this very closely, though. And I don't have a really good. Oh, wait a minute here. Wait a minute. Okay. Let's do a little reconfiguring. Okay. All right. So I'm really looking at the low of the premium right here. And now that I've got a good picture there. You can see a little more clearly that this could be our pivot right in here, and start heading back up. Yeah. Now, it doesn't mean that we're not coming back down. We are. And in all fairness, it would suggest, I mean, the bars on the premium here and here are lower. The trend right now seems to be down. Yeah. Yeah, everything is suggesting we're going to continue to move down rather than going back up. We're going to continue back. We're going to continue down. We're going to test that price here, and not only that, you know, we've got this low to be concerned with. I mean, the premium is way down here. Look at that, and then we breached that over here. Okay, so this we're going down. We're not going up. But it looks like we're going to get a bounce here a little later on. Unfortunately, we've run out of time. So we're expecting this market to continue to drop below the 69.25 level here. And if you look at our IB, let's do a quick IB calculation. Okay. Thursday is the, generally speaking, Thursday is the least likely for the Spoos to hit their 1.5 standard deviation mark. But I would say that today there's maybe a pretty good chance that it will. Ah, look at this. There's the reason for your bounce. INDU went right up there, and it bounced. Okay. There was some divergence here. Let's just get rid of this. Anyway, run out of time. That's our call. We're going to continue to go down. We may test that high. That there's kind of a naked bar up there. What is going to happen first is right now just a little bit hard to say. However, the premium is suggesting boom, 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 boom. We're getting lower. We've tested that price. It's above that threshold level. Up we come, but it just seems to be we're probably going to come right. We're going to come down before we go up. That right now is a gut reaction, but I don't have any more time to analyze it, so I will bid you farewell. We'll come back and we'll review the balance later on today. I'm Rod Kusin, Spoolman for Risk. Rod Kusin, back with a recap of the day's activities. Now we departed a little earlier this morning, pointing out a few rather obvious things based on the premium. Now the first and foremost was this low here. Okay, the low right there is so obvious that we had to be calling a short for today. especially off this low on the premium. So we were expecting the market to return to this price. Now, in the course of the retracement, however, we got these strong bars up on the premium, and in particular above our PT threshold, which indicated to us that this price here would have to be tested. And then you got another real nice strong bar on the way back up, and we managed to get to that price and we saw that the market left a little bit of a gap, so it came back up again, left another gap up here, and it came back up to test that. But then finally you see how the premium gets overbought. All right, you get higher highs on the ES, but lower highs on the premium, and right there at the high, in particular here, you see how the premium, the highs of the premium, we have them charted for you here, what we call a UTH. We'll spread that out a little bit. Okay. UTH at 738, 741, 766. Okay, this is really, really dropping. Okay, so premiums very much overbought here, and the highs are dropping. So every piece of information that you can put your hands on would suggest the need to short this anywhere up in here. Anytime we have a new high, okay, you're going to short it at here and mix it up another quarter of a point and short it again, add to your position. Now, we go back to where we were to get an idea as to where this market is going to go. Now, ultimately, we think we're going to, this is not the low based on the premium. That's not the low. But we've got this big bar down, okay, big bar down here, which is even lower. This is lower than that, okay, so you know this is going to get tested. And ultimately, this price at 71, let's just run at 71, we see that doesn't get hit until after lunch. And what we wind up having here, surprisingly enough, is a blue day pattern. A blue day pattern is one wherein both the highs and the lows of the day occur in the first half of the day. And that's what you had here. It's not to say that we aren't going to go back down here. I'm quite confident that we will. But there's a couple of other issues. Let's first of all deal with the lows, and then we'll go back to the highs. So if you just look at the premium here, big bar down here, higher low on the ES, lower low on the premium here, lower low on the premium again here. So all of this is very, very predictive that this market is shorting. This, that is an issue. We're coming back to 75, 75. But in the meantime, trend is down, all right? So as you look at how the premium is performing here, all right, and in particular, this low, okay, on the premium right there, okay, nice low on the premium right there. So where is our threshold? That's a good question because we never breached this low. So the best that we can do is look for lower lows, pardon me. The best that we can do is look for higher lows on the ES and lower lows on the premium. And that's what you have. Come 10 o'clock, you get this nice low. So we're going to use that because usually the thresholds are going to be pretty well established by this time, so we don't really need to go much beyond this. And we're just expanding this out so that you can see what we're doing. We're just going to extend this particular threshold, all right there. Okay. And you can see where the premium bars are considerably lower than that particular threshold. And if we extended this out even further, which we could do if we wanted to, all of these dips are just really, really low, indicating that this market is, it has not seen the bottom yet. Okay, it has not seen the bottom. Now there's some real strong indications of that. As a matter of fact, just to make this even more clear, let's yeah, all right. I'm going to just do a real quick reset using about 1030. I'll just set this to 1030 just to show you how obvious this is. Okay, so if we use that as our PT, which is ridiculous, then the LT, when we get lower than that, is over here, this magenta colored line. All right, so let's extend that. And as you can see, we're much below this level here on the premium. Right? And so that price is going to get tested, and you see that toward the end of the day, the market was plummeting toward that number, and is yet to reach it, actually, even after the close. But that'll get tested, and so will the low of the day. But again, you've got, if we use this as what we call an LT, as a threshold point, you can see the market is continuing to drop below that. So this low going even lower, and so it's real easy to see the short is the obvious way to go. The question is, where do you short it? Now let's go back and revisit this. Let's look at the highs. This bar right here, okay, that's going to get tested. And on the way up, it was kind of moving in that direction, but you can see how the premium really petered out before it got there. But we expect this to drop and then bounce back up based on that bar. This is a clear-cut, naked bar on the premium, much higher than anything else immediately preceding it. So it's a very strong bar and an indication that we'll be going back up there. But now, where is the real threshold? That's the question that our traders ask. Let's examine the answer to that question. So our high is here, and if we look at where the premium is at that point, the threshold is way down here, and that only applies as the market continues to rise, but it didn't. It began to fall. So what we look for in these instances is a lower high pivot on the ES, but a higher price on the premium. And you see how all of these things called a UU, all of these relate to lower highs on the ES. But the highest price up until about 12:30, which is really quite late, is right here. So if we extend this out, this becomes a good basis for the upper threshold in a falling market. And we can see any breach here indicates that we're going to continue to go up, which we do. Another breach right here, and that continues to go up, which it does. It just peaks over that price again over here, and it's not over yet. Okay, so you are not overbought yet. You put any kind of a cash-based indicator on here, you're going to get overbought all over the place. But the premium says you're not overbought until right in here, right when the premium is dropping below. Cool. So there you are, about 75, and you know that at that price now you're overbought, and premium is showing a drop below that level. Now we come back, we test that price again, and what happens? Okay, we go up just one last time, and then we're back down below that price, below that level of the premium, and the market begins to drop. Now it leaves as a footprint this over here. Okay, we already expect that this price right there is going to get tested, and in order for that to happen, we've got to get above this price right here, and here's your premium, which is telling you, yeah, that's we're going to go back up here. But until we hit the bottom, or at least a good support area, that's not going to happen. So we're continuing to drop even now, and that remains to be seen exactly how the market's going to behave in the overnight. But we're expecting really a bounce and a move back up to this 75 range, and then ultimately back up here to 76. Looks like 76.25. That's how we do it. It's pretty clear, pretty easy to read if you got the right stuff and you know what to do with it. So we invite you to come and take a demo, ask questions, show you how we do this. We have other indicators to help to train the eye, to aid you to learn how to read the premium, but ultimately the best way to do this is to read the raw data itself. But you got to know what to look for. And that's we've built an indicator now. We're still testing it out. It isn't quite complete yet, but it's looking very, very promising, and it should help to automate that process of being able to identify where the threshold is, and that's the real key here. So all things considered, we've got a lot to offer to any trader that really wants to improve their skills and really nail this whole process down to simplicity, clarity, and that's what we hope to offer. And I'm Rod Kusanen, Spooman for Risk.